YouTube, Herman Williams here again. In our last lesson on how to invest in real estate for passive income, I talked to you about a free investment calculator that you could use to help you evaluate an investment property to determine its cash flow and profit potential. I also left a link in the description of that video to this investment calculator, along with a couple of other links to help you with things like determining vacancy rates for your area and other things. So today I wanted to follow up that video with this video where I will actually take you to my computer and walk you through the process of finding a property, taking data from that property listing and plugging it into our calculator and actually seeing what a potential cash flow will look like. But before we do that, I have to apologize in advance for the sound quality on the screen capture portion of this video. I tried several different screen capture software. I tried changing the audio settings. I even tried using different microphones, including the one that I'm using now, but nothing seemed to help. I'm starting to think it may be something with the sound card on my desktop or something else with the computer itself. At any rate, I assure you I will have that problem corrected before I use screen capture in future videos. But for now, please accept my apology and just be prepared to turn up the volume on whatever device you're using. So if you're ready, let's hop over to the computer and crunch some numbers. Okay, so let's look at an actual property and see how it cash flows. So as you can see, I use Zillow for this search, and I just simply search for multifamily units, and I found this little duplex. It says it's listed for $74,900, and it's a 2-bedroom, 2-bath at 1448 square feet. But I should point out, you may, when you first look at this, think that each unit of the duplex is 2-bedroom, 2-bath, when in actuality each apartment is only 1-bedroom, 1-bath, and I could verify that simply by looking at the pictures of the property. So this is a duplex, 1-bedroom, 1-bath each, so each unit would have roughly 700 square feet. Zillow is estimating the value of this property at $69,500 roughly, $69,469, and I'll show you how they came up with that value in just a moment. They're also estimating the monthly payments at $370 a month. Now I need to point out that in this Zillow estimate, this $370 a month that they're showing here, they're taking this Zestimate, the Zillow estimate of the price. They're assuming that you put 20% down, and this price also includes not only principal and interest, but taxes and insurance as well, which I'll show you that breakdown in a moment. But let's just look at some other data that's here on this page. This property, as of the time of this recording, this property had been listed on Zillow for 21 days. It has had 4,604 views, which none of that's really that important. But what might be important is this number here, the number of saves. 247 people have saved this listing after looking at it, and the property's only been on the market for, like I say, 21 days. So 247 prospective buyers have expressed at least an interest in this property. They were interested enough to save it to come back and review it later. But I will tell you that probably most of those interested, possibly investors, will not be as informed as you are after you have watched this video. So let's look at some other data here. Let's go to the home value, and this is where Zillow is getting that $69,469 price, estimated price. They took the low and the high range. They give you a range of $65,000 to $73,000, and you can see $69,500 falls pretty much in the middle of that range. Zillow also gives you a little bit of home value history, and it compares it to the home prices for the zip code and for the city in which it's located. And you can see the blue line down here is the value for this particular property. These other two lines represent the value for the zip code and for the city. So let's look at the price history for just a moment. Zillow usually just goes back to the last sale. Sometimes you may get a little more data than that, but there's something interesting here on this property. According to Zillow, this property was last sold in 2018, June 5th to be exact, of 2018, and it sold for only $9,000. But if you look back at the value range on that property, the blue line, at the time of the sale, the property was valued at over $50,000. So this sale price of $9,000, either that number is wrong, or there was something strange about this transaction. It could have been a foreclosure. Maybe the previous owner had rented the property for a number of years and needed to leave town in a hurry and was willing to just take whatever he could get. I don't know. Or this value could simply be inaccurate. It could be wrong. So those are some of the things you need to verify when you're looking at properties on Zillow or Realtor.com or any of these other sites. Let's look at the tax history. There's also an inconsistency here on the Zillow report. Now in 2017 and 2018, it lists the property taxes as being $1,290 per year, but then in 2019, the tax value doubled, or what they're listing as the tax for that year went up 117%, which this has to be a mistake. The tax assessment, as you can see, did not change during that time. So why did the property taxes for 2019 change? That's something that would need to be verified and could easily be verified by contacting the agent, the listing agent, and just getting the tax history. They usually have that information. So let's look at the breakdown of that monthly cost I was talking about, the $370 a month. According to Zillow, the principal and interest, they are assuming that you're buying this property for $69,500 and making a down payment of 20%, leaving a principal and interest payment, if financed for 30 years, of $290. Now I did a little bit of back calculation, and to arrive at this $290 per month principal and interest payment on a 30-year loan after the 20% down payment, you would be paying a little over 4% interest. Now when we insert our numbers into the real estate investment calculator, we're going to use some different numbers. But you can also see here that Zillow is also showing no mortgage insurance. That's another clue that they are assuming that you paid 10% down in order to, 20% down in order to arrive at this monthly payment cost. Otherwise, you would see a value listed for the cost of mortgage insurance. And then they've got a breakdown of the property taxes on a monthly basis, which if you look at how they calculated the taxes, again, this doesn't add up with what they're listing up here. So I would look at these values and then verify what the actual taxes and the homeowner's insurance, what those actual values are. And again, you should be able to get that information from the listing agent. It also, something else that could be of value in this Zillow search box is utilities not included in the cost. That usually means, when you're looking at a possible rental property, that usually means that the tenants pay the utilities. Okay? Now Zillow also gives you an estimated rental value, and for this property they're listing the rental value as $950 a month. And again, that is not per unit, that is the total rental income for the property. Okay? Okay, so let's plug some of those numbers in from the Zillow site to our rental property calculator that we got from calculator.net, and I will leave a link to this calculator in the description below. But let's plug some numbers in and see what the cash flow for this property would look like. We start with the purchase price, which we're going to plug in the $65,469 that we got off the Zillow site. We're going to put 20% down. We are using a loan for this property. We're going to put 20% down. And for sake of this example, I plugged in an interest rate of 3.5%. The interest rates are pretty low right now. The interest rate that you may be qualified for might be slightly lower than this, or it could be slightly higher. But for sake of this example, we're going to use 3.5% as the interest rate. We're going to finance it for 30 years, and we've estimated our closing costs, which closing costs could range from anywhere from 3 to 5%. But we're going to plug in, I use 3.5% for this example to come up with a closing cost of $2291.42. And does the house need repairs? You can answer yes or no. If you answer no, it takes away some of the input blocks, but if you answer yes, then it gives you the opportunity to put in some repair costs. So in this case, just looking at the pictures, looked like they had already done a lot of cosmetic work inside. They had changed new light fixtures and plumbing fixtures and put in new carpet, fresh paint, and all that was also listed in the description of the property. What I did see looking at the pictures is that the property probably needs some landscaping, a little bit of pressure washing, just some outside sprucing up. So I've put some repair cost in here of about $500 and keeping the value after the repairs at the same as the purchase price, because the things we're doing are not going to increase the value of the property very much. Now, if you were looking at a property where you were actually making some major improvements and it would change the value of the property, then you would need to estimate the value after the repairs are made. But in this example, we're keeping the value the same. So then you move down to your recurring operating expenses, which are things like the property tax that we got off the Zillow site. I put in the $12.90, and we're going to assume for this example that property taxes and all of these operating expenses are going to escalate at 2% per year. So we've got our property taxes here of $12.90 per year. The insurance was $630 per year, again being escalated at 2%. There were no homeowners association fees associated with the property, and the property looks like even though it's an older property, it looks like it's fairly low maintenance. The property actually had window unit air conditioners, and so if one of the air conditioners were to go out, you could easily replace that without too much cost. But for sake of this example, I've estimated the annual maintenance cost to be $800 per year, and that too is being escalated at 2%. Now Zillow listed the estimated rental income from this property as being $950 per month. So that's for the total of both units, and so we're going to plug that in as the monthly rent. And we're also going to be escalating the rent by 2% per year. There is no other income associated with this property. Sometimes you may have a property that might have some other source of income associated with it. If you did, you would list that other income here. But in this case, we're not using that portion of the calculator. The vacancy rate, I looked up the vacancy rate for that particular area, and it's averaging about 7.5%, so I plugged that in. We're assuming that we're going to manage the property ourselves, so there is no maintenance fee associated with this property. We're going to leave that at 0 and manage the property ourselves. And then it asks you, do you know the sale price when you're going to sell the property? So we don't know what the sale price is going to be, so that the no is checked on that block, but we're going to appreciate the property again at 2% per year. And for this particular property, we're only going to hold this property for 10 years and then we're going to sell it. And we're estimating the cost of sale as 6% of the value of the home at the time of the sale. So we've inputted all that data. Now let's hit the calculate button and see what kind of cash flow we get. Okay, so what do the numbers look like? Well, remember we said we were going to hold this property for 10 years and then we're going to sell it. So if we did that, and if the numbers we inputted are accurate, this property would have an internal rate of return over that 10-year period of 35.89%. Pretty darn good. You'd be hard pressed to find this rate of return on other investments. So that number looks good. The total profit when we sell the property 10 years later would be $76,039 roughly. But this is not just profit from the sale of the property. This number also includes your cash flows over that 10-year period plus the profit from the sale of the property. And if you scroll down the page, you can see that reflected here. Here are your 10-year cash flows for the property beginning in year 1, and you can see that these cash flows, as we indicated on our input page, are being escalated by 2% per year. And then you can also see that in year 10 you have a very large cash flow. That's because that's the year that we sold the property, hypothetically anyway. So if you added up all of these cash flows, including the profit from the sale, and subtracted your initial outlay for your down payment and other expenses in the beginning, then your total profit over that 10-year period would be this $76,039. Still pretty good. Another way to measure return on your investment is the cash on cash return. And what the cash on cash return looks at is it measures the annual return the investor made on the property in relation to the amount of mortgage paid during the same year. So again, this is a cumulative cash on cash return over a 10-year period for this property. And you can also see that reflected down here as well. So that number looks pretty good, 478% total cash on cash return. Not bad. The purchase capitalization rate, excuse me, is indicated as 11.95%. Now this one's a little bit tricky as far as determining what's a good number, what's a good cap rate number to have for an investment property, because that number can be affected by a lot of things. The important thing for you to remember about cap rate is that it is a measure of the net operating income compared to the market value of the property. And the most important thing to remember about that is that in order for an investment to remain profitable as time goes by, then its net operating income must increase at the same rate as its market value or at a greater rate. And that's because as the value of the property increases, so will some of your expenses, such as your insurance and property taxes, will go up as the value of the property goes up. So that's why you would be increasing your rent rates in order to keep the property profitable. So don't get too hung up on this number. While it is important it's also important to understand what is being represented here. And 11.95 on one property may be good, and 11.5 on another property may not be as good, depending on a lot of factors, including how the property was purchased, whether it was purchased through cash or through a loan, how leveraged you are in this property. So don't get too hung up on this percentage, just understand what it represents. The total revenue, the total rental income for this property over the 10-year period was $115,464, hypothetically, of course. The mortgage payments over that same 10-year period, roughly $28,000. Total expenses, a little over $29,000. And the total net operating income for the property for the 10-year period was $85,681. Now this number is derived from your total rental income minus your total expenses will give you this number here. So let's look at the first year income and expense breakdown over here. And the numbers that jump out at you immediately, and this is what you should be looking at, is the cash flow. First of all, you want to make sure that this number is a positive number and that it is a sufficient number for what you're looking for in a property. Now this particular property has a positive cash flow on a monthly basis of $416 and on an annual basis of about $5,000. Now that may not sound like much, but for an initial investment in such a small property as this is pretty good numbers. It's not bad at all. And you can see the breakdown monthly and annually for each of the categories such as income, the mortgage payments, the vacancy rate, what it accounts for, property taxes on a monthly and annual basis, insurance and maintenance costs, and so on. And leaving you with a first year net operating income of $78.25. The other thing that you can do with this calculator, once you have this initial set of numbers, if you didn't like the way some of these numbers look, you could come down here and play with some of these inputs. For instance, you recalculate what it would look like if you got the property for a different purchase price. If you were able to get this property for a lower price, obviously it's going to affect your rate of return. Just remember, when using this calculator, if you're on this section and you change the purchase price, you will also need to come down here and change the closing cost, because this closing cost, remember, was calculated at 3.5% of the purchase price. So if you change the purchase price, you need to come down here to this column and change the closing cost as well. But you may want to play around with the rental rate, the increase in the rental rate, the vacancy rate. You can play with all these values and then hit calculate again and see how it affects your numbers up here. But overall, looking at this property with the inputs that we made in the beginning, you've got a decent positive cash flow on a monthly basis and an annual basis. And one other thing I wanted to point out on this page is, if you did something even more productive with your cash flow, like this annual cash flow and monthly cash flow, you took half of this monthly cash flow, for instance, and invested it in a Roth IRA, then your long-term profits and your long-term rate of return on this investment would be even greater. So now that you've seen an example of how easy it is to evaluate investment properties from the comfort of your home, what are you waiting for? I know some people will struggle with coming up with a down payment for that first investment, but if you watch my previous video, I talk about some different financing options that you might be able to use. The other good thing about today's lesson is that once you get used to evaluating properties and understanding cash flow and return rates, you could possibly take that information to another investor and structure a deal where they help you with the down payment. Just make sure you structure a deal that is in your best interest. Armed with all this information, you can find opportunities for you to begin building wealth through passive income investing. But you have to stop just thinking about it and actually take steps to make it happen. As I always say, change your behaviors and you can change your life. So until next time, behave well.